Hey, welcome back to my channel here at LR Options. If you're new, please consider subscribing. Um, we're going to be going over some stocks. We're going to be going over SQ, the symbol SQ, Uber, and VZ, which is Verizon. And what we're going to be looking is stock chart patterns. We're going to look at the flag pattern and the range pattern. Okay, so there are still long lines outside of the larger grocery stores just to get into shop. Stores are takeout only, and restaurants are practicing social distancing. There is now plexiglass between you and the cash register to minimize contact, and placeholders are on the floors of stores to ensure that people are 6 feet away from one another. And public transportation is announcing that they're only to be used by essential workers. Okay, so let's look at SQ, which is Square Incorporated stock symbol, and we're looking at some flag patterns. We've got three, and okay, give me 1 second. All right, the first flag pattern has opened at 59.90, and it ranged until it got to the end of that day at to 59.25. And it's the narrow end of that flag pattern. At the end of the day, it got very narrow, so you can reasonably expect that the next day is going to either gap up or gap down, or it's just going to break out of that narrow point and go up or down. Okay, and it did on the second day, which is April 14. The stock opened at 62.16 again, and it went down to 59.25, and it ranged in that second flag pattern until it got narrow at the end of the day again, and to 62.28. Now, again, it's reasonable to expect that this stock is going to either go up, open up the next day, or go up the next day, or go down, because it's ending at a point. So again, now we're at the third day, April 15, and the stock, of course, opened at 59.75. It went up, and again, it ranged in between another flag pattern, or triangle pattern, or wedge, whichever you like, because they all look very similar. And again, it ended that same day in a narrow point. And again, it's safe to expect that, well, relatively safe to expect that it's either going to go up or down the next day. And it opened at 57.58, so it opened down. So that would have been a good, that would have been good if you would have placed the day before a put option trade. And 57.65. So that's about 2.25, well, no, a little bit more. 3.25 points. That would have been a good profit. And now on the 16th, it actually ranged. So it ranged from, it traded within a range on that day. And it was facing down, it was going down. And again, it's a good guess, as anyone else has said, it's going to either go up or go down the next day. And yes, it did go up 60.41, and it ranged for the rest of Friday. But if you would have placed a call at the previous day, 57.44, and it would have opened at 60.34, that would have been a profit. Okay, and now if you see, all of the simple moving averages are facing up. And so basically most every um, every stock, most every day the stock opened or it got higher. It opened at a higher point. All right, so let's go to a different time frame. This is a 30-minute time frame. Let's check the 2-hour time frame. And again, we're looking at March 24. We see a large pennant or flag shape, and it took a few days to develop. So it started on March 24th, and it ended on April 3rd, the end of April 3rd. So that would have been a good time to place a trade for a call or a put, whichever one you thought was going to be, the stock was going to be opening the next day. It actually opened on a call. The stock went up to 48.57, and then it continued to rise until, let's see, until April 17. Okay, so we're going to change that time frame back to 30 minutes. And let's go look at another stock symbol. Let's look at Uber, UBER. And let's see where we are. Here we are. And we have Uber on April the 1st. It's trading at a range. Okay, and let's see where we are right here. So it started on April the 1st. It opened up 26.77, and it continued to range downwards until April the 3rd. And it stayed underneath the 9 simple moving average. So you could have actually put in several trades each day for put trade, and you would have profited. Like over here, let's look at this one. Over here, you could have traded, you could open up a trade here at 26.31, and it would have the next day profited at 24.18. And you see how that day opened at 25.07. You could have placed a put trade there because it's right underneath the 9 moving average, a 9 period moving average, which usually signals that it's going to continue to move down as long as it stays beneath or underneath the 9 period moving average. And here you go, it continues to stay underneath. And on April the 3rd, it opens at 23.07. Let me see. Actually, looks like 22.92. So that would have been a nice profit there. And again, if you look here, if you would have placed a trade here for a put, you would have to probably taken it off because you see the green candle is signaling that the stock is going to start moving up. So you would have to remove it here, and you still would have made a profit. Okay, and even better if you would have made a profit from April the 1st and held on to it to the 3rd. That would have been even better. But again, if you see, look at that wedge shape. Not the wedge. If you look at the it's traded within a range, almost 2 parallel bars going down, and that's usually a signal that's going to break out at some time. And it did. It broke out on April the 6th, and that would have been a good time for a call trade. And it went from 22.41 all the way up to 25.87. Or if you would want to take your profits earlier, if you wanted to take profits early, you would have taken them over here at your first red candle, 24.85, which would have been a good signal to get out, or at the end of 25.22, or wait to see if the red candle was not going to be a continuing trend going down, but then you had a green candle and 2 more. Maybe getting out at 25.76 would have been good also. But either way, they're all good profits. All these profits are very good. And that's for the 30-minute time frame. Okay. Now let's go to Verizon, which is a symbol VZ, and we're going to look at April 7. Again, another trade in range. This time it ranged for 2 days, and it started at 56.43 on April the 8th, and it ranged within those two parallel lines until April 9, and then on April the 13th, which would have been a Monday. Well, actually, let's see, April 9. Actually, that's a Tuesday. It gapped down, and it opened at 57.10, and it continued to go down. And I guess if you would have seen the first green candle or waited for the second one and realized that it's starting to go back up, pull back, then that would have been a good time to get out of that trade, and that would have been a profit starting from 57.55 to 56.61 or 56.34. That would have been a good profit. Okay, and that was a range of 2 days. So it created a range between two almost parallel bars, and then at the end it broke out. Okay, so thank you for watching this video. Thank you for visiting LR Options. We're going to end here. If you haven't subscribed yet, please hit the subscriber button, and please share, like, and comment, and we'll see you next time. Bye-bye.